What's up everyone, it's Brandon. Despite the downward momentum in the stock market, April has been an excellent month for my dividend growth portfolio, and I wanted to update everyone on its progress. In this video, I share exactly how much my dividend growth portfolio paid me in the month of April. In addition, I'll provide helpful information about each company and whether or not I intend to continue investing in them. If you find this information helpful, please subscribe to this channel and ring the notification bell to be notified of future uploads. It helps my channel more than you know, and I genuinely appreciate the support. Now let's get started. So welcome back to my portfolio. As you can see, the balance is currently at $16,478, which is down by over 3% from the previous week. This is mainly due to a market sell-off which occurred on Friday and included tech stocks such as Amazon and others. This is temporary, and it's not a concern for dividend investors because for dividend investing, we usually invest for long-term horizons and ignore the short-term hiccups in the stock market. With that said, let's go ahead and look at the first company that paid me dividends in April. The first company that paid me dividends in April is Altria Group. Altria is an American corporation that produces tobacco and cigarette products. The company maintains large minority stakes in the cannabis company Cronos Group and also Juul Labs. At the time, I owned 11.4 shares, and the amount of the dividend was 90 cents, so Altria paid me $10.26 in April. Altria has been increasing their dividends for 14 years. They have an awesome 5-year compound annual growth rate of 8.25%, and the payout ratio is reasonable at 57.08%. The current dividend yield is 6.48%, and one great thing about Altria is that they have been consecutively increasing their dividend payments for over 52 years. Here you can see Altria's stock price well below where it was even just 5 years ago. However, the stock price has been steadily increasing since Q2 of 2020, and I expect a dividend increase in Q3 of this year. Next on the list is Comcast Corporation. Comcast is the second largest cable television company in the world. The company owns and operates multiple cable-only channels, including MSNBC, CNBC, and USA Network. At the time, I owned 11.78 shares, and the dividend amount was 27 cents. This means that Comcast paid me $3.18 in the month of April. They've been increasing their dividend for 5 years. They have a strong 5-year compound annual growth rate of 12.34% and an excellent payout ratio at 30.54%. Right now, the dividend yield sits at 2.72%, and I believe it's a good time to buy Comcast with the recent corrections in the market. Comcast has seen a few up and downs in the market in the recent weeks and recent months. However, I still consider the dividend to be relatively safe, and I see Comcast as a long-term play. My plan is to continue buying Comcast and adding to my position over time. This brings us to Cisco Systems. Cisco is an American technology corporation that sells popular networking hardware, software, and telecommunication equipment. The company has nearly 80,000 employees. At the time, I was holding 10.82 shares, and the amount of the dividend was 38 cents. In the month of April, Cisco Systems paid me $4.11. Cisco has been consecutively increasing their dividend payouts for 10 years and has an average 5-year compound annual growth rate of 6.85%. I believe the payout ratio is good at 44.44%. Currently, the dividend yield is 3.10%, and they recently increased their quarterly dividend by 1 cent. Cisco Systems has seen steady growth for the last 20 years and has a strong balance sheet with plenty of cash on hand for buybacks and dividends. I believe the dividend is safe and that they have a good payout ratio. Also, I plan to continue adding to my position over time. Next up is Realty Income Corporation. Realty Income is a real estate investment trust, or a REIT, that operates commercial properties in the United States, Spain, and the United Kingdom. Realty Income pays a monthly dividend instead of a quarterly dividend. At the time, I owned 8.32 shares, and the amount of the dividend was 25 cents. This means that Realty Income in the month of April paid me $2.08. Realty Income is a dividend aristocrat, which means they've been paying their dividends and increasing their dividends for over 25 years. They have a nice 5-year dividend growth rate of 3.67%, but have a high payout ratio at 302%. Currently, the dividend yield is 4.03%, and Realty Income has a solid history of monthly dividend payouts. Because of recent trends in the housing market, I'm watching the stock very closely. However, Realty Income has one of the safest monthly dividends in the real estate sector. They do have a high payout ratio, but the dividends are covered using free cash flow. Next is Cardinal Health. Cardinal Health is an American healthcare services company that specializes in pharmaceuticals and nuclear medicine. It operates the most extensive network of radiopharmacies in the United States. At the time, I had 7.98 shares, and the amount of the dividend was 49 cents. Cardinal Health paid me $3.91 in the month of April. Cardinal Health has been increasing their dividends for 17 years, and they have a low 5-year compound average growth rate of 1.8%. The payout ratio is average at 40.29%, and the current dividend yield is 3.38%. Also, Cardinal Health has been consecutively increasing their dividend payments for 52 years. Although the current stock price is down, Cardinal Health remains a bargain play for long-term investors. Cardinal Health continues to have a strong history of revenue growth and dividend payouts. I plan on adding more shares to my position over time. Next up is Kimberly-Clark Corporation. Kimberly-Clark is an American corporation that produces personal care products and surgical instruments. The company's leading brands include Kleenex, Kotex, Cottonelle, and Huggies. At the time, I owned 2.7 shares, and the amount of the dividend was $1.16. In the month of April, Kimberly-Clark paid me $3.14. The company has been increasing their dividends for an incredible 49 years, and they have an average 5-year compound annual growth rate of 4.19%. The payout ratio is a little bit on the high side at 79.79%, yet the company continues to pay a portion of its profits to shareholders. The current dividend yield is 3.34%, and they've recently increased their quarterly dividend by 2 cents. Kimberly-Clark is one of my favorite stocks because of their strong consumer brands such as Kleenex and Huggies. I like the long-term price and the fact that they've been paying and increasing dividends for almost 50 years. In addition, demand for Kimberly-Clark products is more stable now that the pandemic is basically over. Last on our list is the Coca-Cola Company. Coca-Cola is an international corporation that produces Coca-Cola and other syrup-based beverages. The company has 86,000 employees, with 10,000 employees in the United States. At the time, I owned 8.32 shares, and the amount of the dividend was 44 cents. In the month of April, Coca-Cola paid me $3.66. What I like about this company is that they've been increasing their dividend for over 59 years. They have a low 5-year dividend growth rate of 3.66%. However, the payout ratio is a little bit on the high side at 70.25%. I like their dividend yield at 2.72%, and recently the stock price hit an all-time high of $67.20. This is one of Warren Buffett's favorite stocks and also one of mine too. And despite all-time highs and expensive share prices, I'll continue adding to my position. Many investors typically sell when prices are high. However, I see capital growth and a company that can lower their payout ratio. So now that I've revealed all 7 companies that paid me dividends in the month of April, I want to give you a total. In April 2022, I was paid $30.41 in dividends, bringing my monthly average up to $41.17. This isn't bad because the only thing I'm doing is getting paid to hold these stocks for long periods of time. Now I'll look at my favorite metric, which is the next 12 months. And in this chart, I'll look at April 2023, and you can see that I'm expected to make $36.37. However, this amount is likely to go up over time as I buy more shares of companies that pay me dividends in April. Well, that's it for this video. Don't forget to like and subscribe to this channel for more dividend growth investing and personal finance videos. Thanks again for watching, and I'll see you next time.